Hello students, welcome back. Today we will solve the fifth problem in case of management accounting fund flow statement. So this problem has come for 2009 and 2018 question paper of BCom Bangalore University. From the following balance sheet of Evershine Company Limited as on 31/3/8 and 31/3/9, you are required to prepare the following. Number one, you need to prepare statement of changes in working capital. Number two, you need to prepare fund flow statement. What are the additional informations you have? Students, as I said you before, all additional information will come at two places. All adjustments will come at two places as per accounting norms. During the year 31/3/2009, dividend of 84,000 was paid. So what are the two places for this 84,000? One, it will come in adjusted PL account, and since it's a payment, it will come in FFS, fund flow statement. Assets of another company were purchased for a consideration of rupees 1 lakh. 1 lakh asset is purchased from another company, payable by the issue of shares, and assets include land and building 50,000 and stock 50,000. So students, totally 1 lakh is purchased. In that, two assets are purchased. Land and building 50,000, stock 50,000. So for purchasing two assets, you have not paid cash. Instead, you have paid in the form of shares. So shares are issued, assets are purchased. So shares goes, assets come. Two assets we have purchased. So 1 lakh shares are issued, 50,000 land and building comes, and 50,000 stock comes. So it's a transaction between shares 1 lakh and assets 1 lakh. It's a transaction between shares 1 lakh and land and building 50,000, stock 50,000. Now you correlate, students. Shares, you have issued as shares. So share is a non-current. Land and building non-current. It will not affect. So ignore this. Land and building is a non-current asset. Share is a non-current liability. So non-current working capital will not be affected. So it will not come in a fund flow statement, but it will come in land and building account. Share is a non-current, stock is a current. So current and non-current, there will be a changes in working capital. So 50,000 will come in FFS regarding stock. Share is a non-current, stock is a current. As explained in the theory, working capital will change if it is between non-current and current. So stock is a current assets, share is a non-current liability, so working capital will get affected. So 50,000 will come in FFS, whereas land and building will not come. Income tax paid during the year 70,000. So it will come in two places. One, it will come in adjusted PL account. It will come in provision for tax account and FFS. Depreciation written off machinery 24,000, land and building 45,000. So it will come in missionary account and adjusted PL account. And land and building 45,000 depreciation will come in land and building account and adjusted PL account. Now students, share capital. Last year 4 lakh, current year 5 lakh. There is an increase of 1 lakh. That means shares are issued to the extent of 1 lakh. It will come in FFS, not 1 lakh, but 50,000. Because shares are not issued for cash. Shares are issued for stock and land and building as per adjustment number 2. So shares issued 1 lakh. So 1 lakh will not come in FFS. Only 50,000 stock value will come in FFS. General reserve for 80,000, 1 lakh 40,000. There is an increase of 60,000. So that 60,000 will be treated as GR transfer. Bank loan long term last year 3,20,000, current year it's 80,000. So bank loan have reduced to the extent of 2,40,000. How? 3,20,000 minus 80,000. So bank loan have come down to the extent of 2,40,000, which indicates bank loan is paid. It will come in FFS. So creditors will come in statement of changes in working capital. Provision for tax, you need to prepare an account because we have an adjustment number 3. So it will not be treated as current liability. No adjustment, it will be treated as current liability. But here we have adjustment, so it will be treated as current liability. Next we have land and building. Last year 4 lakh, current year 4,80,000. There is an increase in land and building. So we need to prepare an account because we have adjustment number 4. Depreciate land and building 45,000. Plant and machinery, you need to make an account because we have adjustment number 4. Stock, debtor and bank, all the 3 will come in statement of changes in working capital. It's a current assets. So let us look at the solution, students. Students, stock, there is an increase in stock of 52,000 will result in increase in working capital. There is a decrease in debtor 32,000 will result in decrease in working capital. There is a decrease in bank 86,000, it will result in decrease in working capital. So total current assets of last year 4,64,000 and 3,98,000. There is only one liability called creditors. Last year 3 lakh, current year 2,60,000. There is a decrease in creditor of 40,000. So decrease in creditor will result in increase in working capital. So therefore total current liabilities of last year 3 lakh and current year 2,60,000. So current assets minus current liability, we get working capital A minus B working capital 1,64,000 and 1,38,000. So last year 1,64,000, current year 1,38,000. That means compared to last year working capital is reduced. It is reduced to the extent of 26,000. Next, students, provision for tax account. You need to prepare. It's a liability. So it's by balance brought down 60,000. To income tax paid. When you pay, it's an expense. So it will come in debit side. Debit all expenses and losses. So to income tax paid 70,000. To balance carry down 80,000. So total of debit side minus credit 90,000 is a new IT provisions. 90,000 is not IT paid. 90,000 is IT provided. That means currently 70,000 IT paid and 90,000 is kept aside for future payment. So 90,000 is called income tax provisions. Next we have land and building account, students. It's an asset. So to balance brought down 4 lakh. We have purchased land and building 50,000 by issuing share. As per adjustment number 2, we have purchased land and building 50,000 by issue of share. Then adjustment number 4, we have depreciation. Then take down the closing balance. So total the credit side, because credit side is more, 5,25,000 minus 4 lakh minus 50,000, you get 75,000. It's called additional purchase of land and building. Next, missionary, students. You need to prepare missionary account. It's an asset. So to balance brought down 3,60,000 opening balance by depreciation given in adjustment number 4. Then closing balance. So if you look at debit side is more 3,60,000 minus 24,000 minus 2,60,000. You get 76,000 called sale of machinery. Next, adjusted PL account as discussed earlier. GR transfer. In the balance sheet we discussed 60,000. Provision for tax which we found in provision for tax account 90,000. Depreciation on land and building 45,000. Depreciation of plant and machinery 24,000 given in adjustment number 4. Then we have paid dividend 84,000 given in adjustment number 1. Then current year net profit, then last year net profit, you get FFO, funds from operation, 3,17,000. So fund flow statement, students, sources indicates receipt, application indicates payment. So issue of share 50,000, not 1 lakh. Only stock amount should be taken because share is non-current, stock is current. So working capital will change. So only 50,000 you should take. By selling plant and machinery, we received 76,000. By decrease in working capital, we got 26,000. We received 26,000 from bank loan, because when there is a shortage of working capital, when working capital decreases, we take necessary action to borrow short-term loan from bank. So in order to fill that shortage, then we don't have dividend received, we don't have loan borrowed, but we have FFO 3,17,000. So we got funds from operation 3,17,000. All these are called receipts. There is no redemption of preference share. By purchasing land and building, we paid 75,000. We don't have increase in working capital. We made a payment of 84,000 for dividend. We made a payment of loan repaid 2,40,000. We made a payment of 70,000 for income tax. So thereby fund flow statement tallies. Any doubts, students, please contact me. Thank you.